Joining us now, Namila Mohammed is a banking sector analyst with Chapel Hill. Perhaps she can give us a hint of more current numbers. Nabila, good afternoon and welcome to the program. How's the market now?
Good afternoon. Thank you for having me. So currently intraday, before I entered the show, we noticed that the market was already up around 1.13%. And we're seeing, strong interest in names like Zenith, in MTN, and these are like large weight market cap stock that, would largely move the market at the end of the day, should they sustain this interest through the trading session today. So we're seeing a bit of buying interest, and this is just investors understanding that whatever happened the day before, that's 2 days ago, that's particularly on Tuesday, it's largely as a result of panic selling. And we are starting to see people that understand that the fundamentals of these companies that are listed remains right. So the prices being depressed is just an opportunity for them to position themselves ahead of the potential rally that would, reoccur when we start to see clarity around the news flows that, sort of spurred the panic selling in the first place.
Interesting that you put it that way, because I mean, when two trading sessions ago, I saw more than 8% drop in the banking counter. I was really worried. But I mean, saying that they're also driving the recovery gives a lot of comfort to the heart for, stocks like Access Core, which we know is a major one of the fugas.
Yes, exactly. So for Access, we are also seeing it up today. In fact, yesterday it gained close at 22 naira versus the 20 naira that it dropped to on Tuesday. And today we're seeing it trade within the band of 22 to 22.95, just in terms of what we're seeing from the trading desk, from our trading desk. And it just shows that people understand that this stock is a potential stock that should be had, investors should have in their portfolio, because we're looking forward, being one of the biggest from a total asset standpoint, it means that it would have the opportunity, or the ability rather, to translate that total asset size into earnings, and that is the next phase for Access as we go into the following quarters.
More attractive to investors? Is it the dividends, or is it just the trading and making profits on the market?
So I mean, for Access, yes, since the day that it was announced, sometime around in October, we noticed that the share price has actually dropped by circa 14%, and that is largely as a result of the fact that they did not declare an interim dividend, which is the first time for Access in the past 10 years not declaring interim dividend. And that was largely as a result of the fact that Access is a holding company, and there is a prudential regulation for holding companies, financial holding companies, to have their, their minimum paid up capital above the sum of its subsidiaries. Simply put, Access Holding PLC has subsidiaries, so the minimum paid up capital of each of these subsidiaries combined should be lower than what the holding company's minimum paid up capital is. Now, if you do not meet up with this criteria, then you would be among the financial holding companies that will be unable to declare interim dividend, and that's what happened to Access when they published their H1 results, and we didn't see them declare interim dividend. Now, management has already explained that they are already making efforts to make sure that they cover that shortfall, which is around 10.99 billion. And when they cover that shortfall, they will be able to, pay final dividend for FY 2025, and that would, sort of boost investors' confidence again, because for a dividend-paying stock like Access, it is a surprising thing, of course, to have it not declare interim dividend just like its other peers. So it had nothing to do with their forbearance, because they have actually made provisions for their forbearance, for their forborne loans, because we saw them, record a 9.6 times quarter-on-quarter expansion in impairment charges. And even during the investor call, management did explain that just spoke to the fact that they were able to cater to that forborne loans, issue. It was because of that prudential guideline that, deterred them from paying interim dividend, but they are looking forward to paying a final dividend for FY25, and that should, improve investor confidence in the stock. And besides, as I said, the stock is already up, even intraday and yesterday as well, and that just speaks to the fact that there are investors that are seeing the potential that the large asset base will translate to in terms of earnings in the coming quarters.
Yeah, so I mean, outside of access, looking at the sector generally, so we know that all of these are closely linked to macroeconomic headwinds and decisions. I mean, we've seen what happened with the capital gains tax and all of that. I wonder how much of this can we connect what you just explained to the realities on ground, Nigeria's current macroeconomic realities?
So I mean, yes, we will not rule out the impact that the whole, lack of clarity around how the CGT would be implemented affected the stock market. That is also, in fact, the major news flow that, saw some of our large cap stocks tank on Tuesday to low levels. But then again, these companies have their own respective, should I say, strategy in terms of going forward, in terms of how they intend to run their business in the current macroeconomic climate. We understand that FX is stable, so we see that with FX being stable and market rates gradually coming down, it will mean that for the banking sector, they would have to now start lending more, because it looks like the macroeconomic space is favorable for businesses going forward. So why not lend more to, improve and, deliver on their mandate of lending to key sectors of the economy. So I believe that as we go into FY26, we should see them improve in terms of their loan books, just lending to key sectors, just to, make up for the drop that we're seeing in rates in the market. And I'm sure with the sustained disinflation that would likely, go on for the months October and November, we may likely see that the MPC will decide to cut rates further. And if that happens, it will mean that, yes, interest rates will likely come down as we enter FY26. So the banks would have to lend more to, be able to sustain their margins going forward.
All right, Nabila, thank you so much for giving us all of that, especially giving us update from the market, and enjoy the rest of your day.
Thank you for having me.